Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An indecisive doji cross yesterday after the previous session's bullish white soldier. The market punched up through the combination of the overhead important 50% Fibonacci line for the whole of 2023 at 108.64, with the recently capping medium moving average nearby acting as reinforcement, currently at 108.72, but failed to close over any of them. Below is the previous combined resistance, now support of the short medium moving average, currently at 108.30, the long moving average, currently 108.30 also, and a little lower down the top of the dark blue highlighted upper time, currently at 108.16. And that's of the late December 2023 to early March 2024 bearish Andrews pitchfork. Further overhead, we have the important 50% Fibonacci line of the January 2021 to September 2022 move at 109.44. Meanwhile, further below, we have potentially important May 2020 low at 107.66, and the base of recent action at the April 2020 low at 107.25. I've previously drawn a bright red bearish shift pitchfork for the same action as the bearish Andrews pitchfork, as I suspect the steeper bearish angle of attack may be ending soon, and the bearish shift may be a suitable alternative. I'd pay special attention to the nearby upper time, currently at 109.06, and also the crossover of the tines, circled on about the 26th of April and the 9th of May. And so far today, not much, still capped by the 50% Fibonacci line at 108.64. Cable, aka sterling against the US dollar. A shooting star pattern yesterday, though it's a pretty hard right now to define it as whether it's a type 1 or a type 2 bullish. It's moving towards the bullish side, I think, actually. The market punched up through the recent bow tie formation of three moving averages, and that's the short moving average, currently at 126.5, short medium moving average, currently 126.66, and the medium moving average, currently 126.71, plus the December 2020 low at 126.72, and the 50% Fibonacci line of the June 2016 to September 2022 move at 126.99, but only managed to close over the bow tie and the September 2020 low. Now looking below, we have support from the combination of flatlining long moving average, currently at 125.84, and the 50% Fibonacci line of the July to October 2023 move at 125.90. Going back now to the bow tie formation of the moving averages, these all entered in the right order and are seemingly exiting in the right order. So be on the lookout to see if the moving averages head higher or lower. At the moment, we have one heading lower. Additionally, 15 to 20 sessions after the crossover, we may see a further move in the direction of the exiting crossover. That's between the 25th of April and the 2nd of May. Be prepared to possibly see the following: volatility, a change in trend, or a reinforcement of an existing trend. For the moment, we are still within the previously mentioned general congestion zone formed between December 2023 to January 2024, and that's between the 126 area on the downside up to the 127.75 area on the top side. Further down, we have the lows of February at 125.32 and 125.15, the latter being the more significant. As if all this action and pattern building was enough, last week was a weekly key reversal up as well, for which we are now seeing some more than limited moves higher. So far today, well, not necessarily that much. It's market staying over the September 2020 low for now, but it's starting to move up towards that 50% Fibonacci line up at 126.99. Euro sterling. A bearish engulfing pattern yesterday, if only just, which wasn't that hard to do as the previous session was an indecisive doji cross. What was most interesting about the action was how we dropped back down below the dark blue highlighted upper time, currently at 85.76. It was a November to December 2023 bearish shift pitch hawk, plus the declining medium moving average, currently at 85.78. Now looking below, we have the combination of the short medium moving average, currently 85.48, and the combined lows of December 2022 at 85.45 and December 2023 at 85.47. Overall, the market is still within the breached but not broken, purple highlighted, late January, small expanding wedge pattern. I should call it actually just an expanding wedge pattern because it's not necessarily so small now. And that's currently between 85.33 to 86.32. I recently had highlighted the possibility of the two pipe bottoms, the one seen in mid-February and early March, might lead to speculation we have a larger double bottom pattern form with these pipe bottoms. However, this idea is rapidly disappearing due to lack of any incentive to carry it out. Now, so far today, a continuation low of prices now approaching the short medium moving average below. US dollar against the Japanese yen. An indecisive doji cross yesterday with the market trapped between the August 1990 high at 151.58 that sits below and the recent high at 151.97. Further down is the congestion from late February between approximately 150 even to 150 3/4. Seems the top side is still capped by the same capping peak formed by the high back in November last year at 151.92. And beyond November, last year's high, we have the middle time, currently at 153.91 of the July to December 2023 bullish Andrews pitch hawk, which is highlighted in bright red on my daily chart. Overall, we are still within this bright red highlighted pitch hawk with the lower time below, currently at 146.63. We're also still within the larger purple highlighted February 2022 to January 2023 bullish shift pitch hawk, in between the middle time overhead, currently at 159.19, and the lower time below, currently 145.11. So far today, nothing. We're still trapped. US dollar against the CNH, the offshore Chinese yuan. A third bearish black crow yesterday and a significant test of the downside support from the extension of the upper trend line highlighted in dark blue on my daily chart for the recent ascending triangle pattern. That's currently at 723.72, ending up closing right on it. A little below is the reinforcement of the trend line extension provided by the flatlining long moving average, currently at 722.98. All this is in the shadow of last month's monthly key reversal up here in spot USD CNH, the offshore Chinese yuan. However, that is not all. As though I do not show here on this chart, there were also monthly key reversals up for March in USD CNY, the onshore Chinese yuan, plus monthly key reversals up in March for the US dollar CNY 1 month NDF and 1 year NDF. All these are quite significant, especially if we have follow-ons. Overhead, we have nearby a new late March based downtrend, currently at 724.92, as well as the extension of the lower trend line highlighted in dark blue on my daily chart, currently at 724.69. Okay, so 3 weeks ago I laid out some ideas for potentials below for the then breakout lower from the ascending triangle pattern. Thus, primary target X is down in the 716.05 zone, with a secondary harder to reach target X1 down in the 710.70 zone. The opportunities below have been severely curtailed right now, but for the moment I'll keep those targets on my daily chart as we've already had a force break lower and now a force break higher as well. So as I say, I will keep them on for now, but I'm happy to retire them in a heartbeat. But, and it is a big but I'm also mindful of the potentials topside from the recent move higher. So for good order's sake, I've marked for now a primary target X2 at topside for a continuing move higher at 730.05 and a secondary much harder to reach target X3 up at 732.80. Now so far today, a further test of the dark blue trend line below, but a rejection once more. US dollar against the Mexican peso. A reactionary bullish harami yesterday, if only just, after the recent bearishness. This still didn't stop yesterday making a new low not seen since 2015. Prices penetrated the October 2015 low at 1631.68, but ended up closing back up over it, as well as the November 2015 low at 1635.08. It was nevertheless a third consecutive close below the lower time, currently at 1648.04. The dark blue highlighted December 2023 to January 2024 mildly bearish shift pitchfork. Now looking above, we have the December 2015 low at 1646.25. So far today, a lower open and an attempt on the downside, if seemingly relatively lightly at the moment, as prices dip below the November 2015 low and approach the October 2015 low once more.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.